The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 22nd, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free, pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on Turkey Tuesday. That's because I won't be with you on Wednesday, Thursday, or Friday out there. So let's go ahead and get this terrific show started. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading up 32 points. She's trading out at 18,988. S&P is flat, trading at 2198. NASDAQ Composite up 13 points at 1328. DAX closing up 28 points. I should say the Russell 2000 up 6 points as well. That is trading at 1328. Maybe I already said that, and if that's a duplicate, I apologize. You've got the FTSE closing up 41 points. Gold's up $2. Silver's up 16 cents. Natural gas is up. Light sweet crude is up. Everything is up, up and away. You got to love that. Hey, to the upside, speaking of the upside, AutoZone, another nice day here, $14, another 2% nearly the upside. Burlington Stores up about $12, 15%. Amazon up a little over 1%. That's up nearly $9. Cracker Barrel, you got to love that Cracker Barrel. Of course, I haven't been in a Cracker Barrel for a while, but it's up $8. We don't know what the stock is doing. We'll go check that out today. You've got Equinix up $8, Dollar Tree's up about $8, Cena Corp up $7.50, Priceline up $6. That's just a sneeze to be up $6 inside of Priceline. To the downside, though, some problems, right? Palo Alto Networks up $19, Dycom Industries down 19, Intuitive Surgical $17.77. Sounds like somebody's ringing the one-armed bandit on the Intuitive Surgical. Patterson Company's down $9, Chipotle's down $7, Bard CR Inc. down $6. So we've got plenty to look at out here. Where do we begin? Says Steve, can we still get a small pullback here in your view before we go higher? Yeah, sure, Mike. We can get anything. Here's the answer to your question, maybe from a pattern standpoint. You know, can we get one? And certainly, look, I've been wrong. Not with regard to the market moving higher, wrong with regard to that we would see that pause and we would see a pullback, you know, into Stevie's red line. And, of course, what I was referring to there, and it will eventually happen, but it's not exactly playing out, Mike, the way that I had anticipated it. Here's all of the Stevie red lines, at least the red lines for the S&P, the Dow Jones, the Russell 2000, the NDX. This week is a very difficult week for price to really pull back. Any dip basically is a buying opportunity. But we're going to go confirm that because there are some short-term patterns out here that we respect, and we want to go ahead and take a look at it. We'll take a look at their oscillator and change line to help us understand that. But you're going to have a very light trading session tomorrow. Friday is going to be, you know, a half a day. Probably Friday's activity out there. You know, I've seen where Fridays can actually pull back and present you with some buying opportunities, you know, out here. We just got to go ahead and play the patterns. But at this stage of the game, yeah, I mean, it's only a 20-point move for the S&P to come back and test Stevie's red line. Inside the Dow, it's you're at 18. Basically, what's called 19,000, so it's about a 100-point move or so to the downside. That's not a big deal out there. But is it going to happen, Mike? If it's going to happen, if it's going to start, there have been plenty of opportunities along the way for this to occur, and each of those opportunities have failed. Remember, I have said, as I was suggesting last week, that this is what the market wants to do. I said, do not take the short side unless you're an intraday trader and you're trading certain patterns out here. Now, in the NQ, as an example, there are no keys of G inside the 30-minute charts. We did get to F major out here, or an F minor. I don't know, which is it. Either way, you got to that sixth letter at about 10 o'clock this morning inside the NQ as prices moving higher, doing less relative energy. That alone was not the reversal signal because it was just a high wave-ish type candle. Very next candle was a doji. Doji at resistance up at the highs. They do mean something, but it was really that following candle out here, that little bearish engulfing. Now we can see that in each of the moves higher after that sixth wave out here, price continued to get rejected. We say rejected, and we got rejected by the oscillator and change line as well as that TAS market profile. Now you can see that what price has done since that sell-off, little bearish, bullish candle that formed at noon out here, price has now run right into that oscillator and change line. So, Mike, here's how I would take it. If this 48.77 level continues to act as resistance, meaning no close above it, I don't care if price during a 30-minute period of time, is able to overshoot it. The question is the body of the candle is the essence of price. So where does price actually close? Continuing to close underneath 48.77, then would set up an A to B equals CD to the downside. It would look something like this out here to set up a Gartley buy pattern. And the first target becomes 48.53. That's so logical if this is the way that it were to play out. That would be your entree or entry into a long trade inside the NQ out here. But we don't have a confirmation on the current session out here. So that pattern that I just drew in there, you need to have a confirmation. So the NQ is giving you a pretty decent signal out here. If I look at the ES mini, again, I'm looking at short-term patterns here in order to really be able to answer Mike's question. And when I say short-term, 30-minute charts, I'm not looking at 2-minute charts and 10-minute charts out there, but a 30-minute chart. So a reasonable intraday time period. Inside the ES mini, this was moving higher. No seventh wave move to the upside there. No price relative strength divergent pattern. What it did generate for us is a Tom DeMark sequential count, TD13, right here at the very high. This was last night at 11 o'clock. Price started moving lower. Got that nice little shooting star candle at about, about 12:30 in the morning. And price continued to trade below Stevie's red line out here. Inside the ES mini, look, if the NQ is over to take its oscillator and change line, the next level of resistance, Mike, would be up to the ES mini on its 30-minute time frame. I'd be looking at the 2197.50 area, somewhere right around there, 2197.75. 50, maybe it's 21.98 by the time it would be all said and done. If those levels act as resistance, then the answer to your question is possibly yes. This could continue to pull back out there. So that's the only things that I see. If I take a look at the Dow as an example, there really wasn't much in the way of any kind of significant signal. You had a TD setup candle out here, at about midnight as well. Particularly interested in the IWM. Well, Mike, okay. When we get back from this break, let's go take a look at the IWM and anything else that you'd like. Steve at TFNN.com, or give us a call, 877-927-6664. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 32. S&P is up less than $1 right now. So we're going to go take a look at the Russell 2000 IWM and so forth for Mike inside the Tiger's Den and see what the messages are. Now, Mike, I think, was asking for, are there any seventh wave moves out there? Inside the Russell 2000 on the equity futures contract, there is a key of G out here. So this would be important to pay attention to because when these fail to work as a top or a bottom, it tells you a lot about the momentum of the market. We know there's a lot of momentum, by the way, inside of the Russell 2000. So you've got a seventh wave move. This occurred at about, let me get my crosshair out here, give you the time. This occurred at about 2 o'clock this morning, maybe 1 o'clock. My times at the bottom are all really messed up. So it looks like around 1 o'clock this morning. The price point on that looks to be 1329.50. So you're at 1328.50. If we get above 1329.50, it says that this thing really has recycled out here, and price is moving higher. That's the only potential. It's a 5-hour chart. If I look at the 30-minute and 120-minute time frame charts, we're not going to see anything out here that suggests that this thing has a top. Most certainly, we're not going to see that inside the daily chart. That is of the equity futures contract. Now, inside the IWM, as we like to say, nothing more bullish than a failed bearish pattern. We can see that a few trading sessions ago, 4 trading sessions ago, was the confirmation of a TD setup 9 count out there. That was 9 consecutive closes greater than the bar 4 bars earlier, which oftentimes can be a very exhaustive type move out here. In this case, it wasn't. In order to get a confirmation, you need to see a minimum of a bearish reversal signal or a move down below Stevie's red line. Nothing has occurred in that vein. There's really no A to B equals CD pattern on the shorter term that you and I can draw in here. We can draw in a longer term one. If we do that, this is what it looks like inside the IWM. Let's go take a look at it. And also with regard to the IWM, you can see it's above all profiles, daily, weekly. So it's got the freedom to continue to run. Let me turn off those profiles. Where's my edit button? There we go. Let's just turn those off. And if we take a look at the A to B equals CD, if we go ahead and look at the small one, right? This is the conservative one, which, by the way, I believe that's been confirmed. Well, let's get the volume out here. Let's just let's not think it. Let's actually verify it. Now, in this case here, we're going to use as a swing point the high of 125.80, 125.88, the session of September 23rd, 125.88, volume of 26 million shares. That was passed with 95 million shares. Yeah, I would say just slightly a confirmed A to B equals CD to the upside inside the Russell 2000. Now, here's the small pattern. Right, small pattern starts at the bottom back on June 27th. Coincidentally enough, I guess, that was Brexit bottom, right? And then we come all the way back down here to 11.3. You can see it's made the 1-to-1, right? 1-to-1. A to B equals CD. Oftentimes you'll hear people suggest to you that 1-to-1, that's it. Nothing could be further from the truth. You want to master that C to D leg. And first of all, only 60% of the time we're going to see a 1-to-1. The move off of the C to D leg, it's huge. Huge in strength, huge in confirmation with regard to volume. So what this says is the IWM wants to head to 137.38, maybe 143.51 out here. So huge move. Bodies of the candles are starting to get a little bit small out there, but continuing to rise. So, that's what the IWM is doing. Could this be a pause point? Yeah, maybe. Where would things pull back inside of the IWM? What did I do with that chart? Oh, I put it over here. At this stage today, I'd give you the number 127.92 on a pullback. I might feel like a good pullback out there, but the red line's likely to rise as price even moves lower out there. So, Mike, I hope that helps you with regard to the Russell 2000, just the overall indices out here. So what else do we want to go ahead and take a look at? Is there anything else inside the Tiger's Den? And I want to make sure I get to everything that was out there. I see that Maria wrote ES up, VIX up, divergence. Maria, that's an excellent point. Thanks for asking that question out here. So let's go take a look at what Maria is looking at. Now, here is where, Maria, I would say you really start to pay attention to something like that. And that is where you really start to see a rising bottoms pattern. So day one of that, not that big of a deal. Instead, what you like to see here is if we come back and take a look at these types of signals, just come back into the June timeframe, between May 27th and really May 27th and June 8th out here on a closing basis. So, Maria, I would say when you see that, just go ahead and switch your chart to a closing basis set of tools. Both for the now in this case here I'm showing the S&P 500. That doesn't matter to me whether you're going to show the S&P 5. The reason why I show the S&P 500 is because I'm looking at the VIX spot index, a cash index versus a futures contract, right? So I'm just trying to keep everything the same versus showing the ES mini where the cash spot index is in trading. You kind of get my gist out here. So when we take a look at just the spot index, you're looking for periods like this back here from May 27, 2016, into about the June 8th timeframe. You saw a rising bottoms pattern on a closing basis in the VIX. You saw a rising closing pattern inside of the S&P 500. That, you're exactly right. That is not legit. It says that is Humpty Dumpty sat on the wall. Humpty Dumpty's going to have a great big fall or some type of fall out there, and you want to pay attention to that. That's when you start looking at all these other patterns. Maybe it's the key of G. Maybe it's something else in the intraday chart out there. But that's what you look at. And it's consistent, right? We had a nice pullback during that occasion. There was another occasion where we saw rising bottoms patterns. This was from July 20th and through July 29th, but the pullback was relatively small. That's why we use stops on everything. That pattern went ahead and reared its head again during the August 5th time period, really August 5th through about August the 12th out there. So one day I have found, doesn't really set the hook for something and it works the other way as well. I'm just showing along the rising bottoms. You can see declining tops in a VIX index, and you can see that the S&P 500 is continuing to fall. So it works in opposite direction as well out there. So, good point on the now. what we should see is some type of topping-ish pattern. That's really the signal of the VIX. Once it gets below Stevie's blue line, that's typically where we see some type of short-term top. So back to Mike K. Hey, can we see a pullback? The answer is yes. We're getting into that stage where we should see that. No pullback is going to take place today unless you see a closing price and the VIX spot index above 1302. I don't think we're going to see that out here today. Friday could be a different thing, because when what is it? When who's away, the mice will play. What's that expression out there? But you know what I'm referring to out here. So, Fridays can be a devious day out there. The week of Thanksgiving, everybody's out getting full, full of all kinds of stuff, full of stuffing. This market's getting full, but not so full that it can't move higher, and it will move higher. You come January 15, 16, 17, 18, 19, 20, this market's going to be much higher than where we're at right now. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. This chart here is an interesting one certainly to pay attention to, and that's the New York Stock Exchange. And as we take a look at it, first, with regard to in the price area of the chart, there's two very interesting patterns to focus on, one being the island bottom. That is a significant bottom. The other is the island top. That is a significant top. Now, it's the island top that you and I are focused on right now. That formed out here between September 2nd the 6th, the 7th, and the 8th. So it was the gap down on the 9th, and it was really the gap up on the 2nd of September that formed that island top. Now, that island top has not been visited. Everybody that bought during that time period inside, well, you can't buy the New York Stock Exchange. That's another reason for us to kind of say, it's okay chart to look at, but let's be real out here. And we are being real. But in any event, everybody, in essence, in theory, okay, if this happened on your chart, everybody that would have bought out there would have been stranded. It would be like Gilligan's Island. Now, what's nice about it with regard to its message is price is trying to make its way back up there. When I say back up there, it needs to close inside 10.827.19. We're not there yet. We haven't even been there yet today. We've gotten up to a high of 10.816. So 10.816, and we're looking for 10.827 out there. So about another 10 points. But okay, that's fine. Now, what we want to do is see if price closes in it and then takes out the highs. Nothing more bullish than a failed bearish pattern, and that is one of the more bearish patterns out here. So it is certainly worthwhile to pay attention to it. What's also really important on this chart is the center section and where it closes today. Now, where it closes today is, if we were to close right now, the reading would be 160.37. That is taking a look at the advanced decline oscillator. That's really looking at the difference between the 19 and 39-day EMA with regard to advanced and declining issues out there. What's most important about that is that when we get above 150, that is telling us that we have a market that is going to run higher. The times that it fails, when I say fails, the oscillator closing above 150 and prices not moving higher, doesn't tell us how much higher, right? We got to look at other things out there, but not moving higher at all. It's rare. I mean, it's so rare out here. It's really important to pay attention to the plus 150, just like the minus 150. So plus 150 is overbought. You can stay more overbought. Minus 150 is oversold. It can stay more oversold. Oftentimes, the minus 150s have more important meaning because we can see where you see the market form a bottom, bounceable bottom, buyable bottom, really on that next trading session or very close to it. So watch today. The market breadth, hey, by the way, I heard some people on one person on CNBC, might have been Asia CNBC, I can't remember, and last night, and then somebody on Bloomberg TV talking about the New York Stock Exchange, talking about market breadth, and saying how horrible it was. Man, I wanted to be able to reach through that screen and say, how can you give such lousy, yeah, I wanted to say the S word there, such lousy information to your viewers out there? I suppose it's all in the eyes of the beholder, is it not? I can tell you that market breadth has been extremely strong. The volume aspect of it is at all-time highs out there, folks. Don't look inside the New York Stock Exchange are a bunch of closed-end bond funds out here. You know, that's what people fail to realize. They don't look underneath the covers of what is it that we're really paying attention to. So it is those, you know, have we made a higher high in the advanced decline line? No. But gosh darn it, you need to understand what's inside it, what's making that up, and then take a look at this is an area where people believe in volume, and you really got to take a look at that volume oscillator at all-time highs yesterday. That was the closing price. That is not the makeup of a market. You know, you got to compare apples to apples out here. And so we're looking at advancing volume less declining volume divided by total volume out there, right, of the day, in order to really get a gauge as to what the market is really communicating to you and I. That's the beauty of this market and the data that we have, the so-called, you know, what do they call, big data or something along those lines. And, you know, teach this information to your kids. Or have them listening to these shows, my show, Basil's show, David's show, Tom, you know, have them really learn this stuff out here because, you know, they're at that age where they can get the right buckets down, the right system down, right? Like I know you have told them, honey, you probably said the word honey, make sure you put your retirement money to work at the end of January, period. For those of you that have your own self-retirement programs out there, do not do it on April 15th. Do not do it on April 15th. You're missing out on such a the whole way that the money game works. It's all based on compounding. And so you've got to get those periods of growth in there. And over the period of the last 85 years out there, that period of growth from the end of January into May 1st is huge. From April 15th to May 1st, 2 weeks, Not even close. Not even close out there. So, no, Kaz, the market breadth is strong. Here, I'll show you this. The market breadth is strong and rising. This is through yesterday. I don't update this until on a daily basis out here. Here's the advanced decline line. Okay, that's the center portion of my screen, which by the way is rising. Right, it continues to rise. Has it taken out the highs? No. Why? Well, really for a couple of reasons. Let me show you. There's a couple of reasons. One, I already shared with you. That's the closed-end bond funds. The other is understand what's inside here. Let's see, open file, open sesame, as they say. Let me see if I can find my New York Stock Exchange chart that would show this to you. And so NYSE, here we go. If you want to take a look at, the U.S. stock market, right? Let's take a look at the U.S. stock market. That, by the way, is the center panel of my screen out here. This is the top 100 stocks. These are all companies that reside in the United States out here. And right now today, that is trading at 87.36.10. That is above the high of 87.30.16. set back in May of 2015. Okay, so, price-wise, this thing is back to breakout areas. If you look at the top 100 international stocks, that's the bottom panel on my screen, yeah, they're acting piss poor. It doesn't get any simpler than that. It's so important to understand what is it's just like you and I, we take a look at the QQQ series ETF, right? And we know to go take a look at let's take a look at this. We know that during the period, sometime over the last year, leading the market to the upside was the NASDAQ 100, right? And it was like the FANG stocks, right? And everybody talked about how it's only 10 stocks, it's only 15 stocks leading the market higher, and therefore there should be some problems. Just the opposite would be true, would it not? And what you and I know, not jumping around here, I've got to open up another chart, but what you and I know, we took a look at it yesterday, or is it file, open sesame again, I got to go find it here. What you and I know is that it is all of the other stocks, the equal weighted fund inside the Qs, which means Apple has the same equal weighting as stock number 108 inside the NDX 100, which is 108 or 109 issues out here. And if we take a look at the Qs as an example, another little bugger, we can see the top portion is the QQEW, a brand new all-time high again today, trading at 46.47. The equal-weighted stocks are the ones doing all the work. So just the opposite is true. So if the other message was bearish, what would this message be? Yes, this message would be very bullish. That's in the Qs. Take a look at this volume oscillator before we go off the air. All-time highs. That's the bottom panel inside the New York Stock Exchange. It's going higher, period. The story.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Referring to one of our guys, gals in the den, Kaz. Here's an example with regard to market breadth, just to put this in perspective, kind of put the icing on the cake. You've got the New York Stock Exchange today trading down 1 point. It's trading out at that 10,790. So it's basically flat off 1 point. If we take a look at advancing issues versus declining issues, you have 1,866 advancing issues, 1,060 declining issues. So we've net advancing issues with an index that is a slightly, just slightly negative today. You know, there is strong market breadth out there. Where the numbers that I had on the last chart that we looked at are only going to increase today. So all is healthy inside of the New York Stock Exchange. If we eliminated those closed-end bond funds, and it's a lot of work, I mean, it's a lot of work for me to do that, so I don't do it anymore. It's just, I wish there was an easier way to do that. Then you'd see a whole different picture out there. You'd just be like, you know, it would be unequivocal. Can I say that? I think so. With regard to what its message is out there. So, you know, so where are we at? You know, where we're at, yeah, are we looking for some types of short-term pullbacks, retracements that are going to end up being buying opportunities out there? Yeah, absolutely. You know, but this market is going to move higher. It's going to move higher between now and January. Price projections, I don't know if this is where we get to by then. You know, I don't think so, but I'm not going to take this off of the table. Look, we are, at a minimum, we're in wave 5 of a Elliott wave move out here. And so the S&P 500 is going to target 2497. You say, how do you even come up with that figure? All that I'm really doing, if you take a look at the 3 basic rules of an Elliott wave system out here, rule number 1, wave 2 can never retrace more than 100%. Well, here was our wave 1 starting back in March of 2009. That second wave never got back there, so that qualifies. Rule number 2, wave 4 may never end in the price territory of wave 1. Well, shoot, no problem. Not even anywhere close to that, so that's an easy one. Rule number 3 is out of the 3 impulse waves, referring to the up waves here, okay, 1, 3, and 5, because the retracements are going to be 2 and 4. So out of the 3 impulse waves, wave 3 can never be the shortest. Well, we've got that identified out here. That says here, this is how we know, or we believe, that wave 4 was the one that took place. This is a monthly chart that we're looking at back in October 2015. And it's very easy to identify the price estimate for the 5th wave, which is going to be equal to wave number 1. And that's how we come up with this 2497. Now, look, the S&P 500 has a consolidation pattern that targets 2350, 2450. So 2497 is right in line with what we're looking at. It doesn't say we're going to do this as the Santa Claus rally, but it doesn't say that we can't either. But either way, that is at least a minimum objective out here. Now, inside the NASDAQ composite, that price objective is 58.04. You're at 53.78. That's not a huge move from where we're actually trading right now. And inside the Dow, the move is 21,747. So we hit 19,000 today. The Dow probably closes underneath 19,000, and people are going to say it was a failure or something along those lines. Some type of misnomer. Okay, so it tested 19,000, closed below it. That doesn't mean the market is ready to come crashing down. It's just not in the cards out there. That is fighting. That is why, actually. What are the conclusions that somebody can come up with as the reasons why that would even take place out here? We've broken consolidation patterns. We're in the favorable seasonal cycle. The first year of most presidents out there, the market moves higher into May, July. The evidence is just sitting out in front of us that is suggesting otherwise. We don't have any kind of bearish reversal patterns really anywhere on these intermediate term charts out here. It's just not to be found. And the New York Stock Exchange, that price projection is 12,516. That's about 20. It's about 1,800 points away from where we're trading right now. That will need a lot of giddy up and go in order to get there. Now, look, these are just minimum objectives in that fifth wave out here. But again, it's longer term. Here are the levels inside the consolidations. What I want you to do, look, I'm not doing a show tomorrow. I won't be back with you till the following Monday. I want everybody to be very safe. You're going to be sitting around a table with family. Maybe you can take some morsels of information from this show or some of the other shows out here and share them with those, around the table. This is a great time to be in the markets out here and be at all-time highs because the markets are going to go ahead and move higher. There's no resistance. We've got to look for patterns and pullbacks and buy those pullbacks. But we're in a wonderful time inside of these markets. And don't get me going on if we have inflation, okay? Which we are going to have inflation. Are you a believer that we're going to have inflation? Because now, with regard to inflation, what you and I know is one thing: inflation and the way the S&P 500 behaves is a beautiful thing. The markets, the S&P 500 specifically, so the markets we'll call them, do not go down in an inflationary market. It just doesn't happen out here. Oh, sure, it can pull back or something like that. But in general, and we're taking a look at the longer-term picture out here, the market rises. So if you believe that inflation, if you believe all of the money, if you believe that QE 1, 2, 3, 4, how many ever QEs we've had, that because those are ending, okay, because I hear this theory out here all the time, and I just scratch my head. I take that 2x4 where things happen for us, not to us, and I bang it against my head and say, I wish I could bang it against those heads out there, because I don't really believe that all that cash has really made it into the system in order to get the inflationary train going out here. And the Fed keeps saying, right, now they're down to really one objective, right? They've got the full employment thing, right? And so now it's just, maintaining and getting a 2% annual growth in inflation in a inflationary time period, folks. The stock market does well. So where is it? Where is it? Where is it? What's the evidence that shows that the stock market is not going to perform and continue to move to higher ground out here? It's not coming from the inflationary aspect. It's not coming from the longer-term patterns out here. And that's what bodes well for gold, right? For gold and silver commodities themselves. In an inflationary period, here's the chart here. These metals simply move higher. So, not looking at the day-to-day activity out here, if we are moving into it's different if it's a deflationary time period. But that's not what's really being talked about. That's not what the evidence is supporting right now. But in a inflationary time period, that is when we see gold also take off. All asset classes out there, right? Real estate, the stock market. It's a beautiful time. So we should always be looking for, if there are people that believe buying the pullback, is going away. I mean, show me. Send me an email. Show me out here. Give me some real evidence, like you and I do. Strong dollar, right? We hear that strong dollar. I don't even I don't know where that chart is on here, but you and I have proven that that is not accurate either. Markets go up in a strong dollar environment. Markets meaning the Dow, the S&P. It's a beautiful thing. Beautiful thing. Anyways, we're going to be back for our last segment, but I certainly, sorry to be on a soapbox, but I'm really just trying to share with you data, evidence, just the facts, as Joe Gannon would say. Great.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Michael writes in and says, hey, check out the one-year chart for CBI, Chicago Bridge and Iron. They've been around for what seems like forever out here. And I said, check out the one-year chart, but I don't know what time frame it is. Let's do this. Let's kind of work in reverse order out here. And Michael, this is one area that I'm sensing from the way that you wrote this that maybe because of the new administration, so on and so forth, you're looking for Chicago Bridge to benefit from that. And so if that is the case out here, with regard to trying to identify some type of pattern, Gartley by A to B equals CD, whatever it might be, a wave count, a time to mark count out here. Nothing was really popping up on my screen there. That doesn't mean that it hasn't bottomed. But if it has, if we watch the monthly chart and you take a look at Stevie's red line out here, it's really priced at about 33.75. So price is trading right on it right now. Michael, what you will see is you'll see price close above that, and then the red line just continue to act as a support on any pullbacks out here. So the monthly chart is saying it's right on the line. You know, it walked the line. It was the Johnny Cash walk the line. So right now this is walking the line. And if it closes above, we'll call it 33.75, then your assessment, I would think, would be right on that you could be seeing a significant bottom out there in Chicago Bridge. On the weekly basis, you know, do I really have anything out here? The only thing that I have, this tells me that price wants to move up to about 36.41. So there's not any right around that level. There's not anything here that tell me otherwise that it doesn't want to. It's got some nice bottoming candle sessions out here, so that really supports your idea of, hey, look at the one-year chart. Of course, it's longer than a year out here with regard to Chicago Bridge. CBI is a ticker symbol. If we look at the daily chart, let's look at the daily chart here. Let's switch over to daily. That'll make it easier. Look at some volume characteristics. Nice breakout. Now, this was a breakout prior to the election, right? October 28th. That is called wide price spread accelerated volume. Now, remember, inside of Tom's book, the book that each of us own out here, right? The Art of Timing the Trade, being able to utilize volume out here. You always want to, you'd like to see price pull back to where it broke out. Well, gaps, they help us. As well as wide-ranging bars, they help us, as well as volume, right? And price here came right back to the breakout. I'm referring to the swing point from October 26th. Now, look, that had volume of 1 million shares. The pullback was on 1.5 million shares. But that's not really the story. The story was this gapped up with 4.8 million shares. So the pullback was with light volume. And then you had another sign of strength, another gap to the upside on November 9th. Now, price has not come back into that level. Does it need to? I don't know. If we look at a day, I know you wanted me to tell you, I don't know that it really does. But if we take a look at what it's actually done out here, looks like it's completing a 1-to-1. It's already done the 1-to-1, A to B equals C to the upside. But I'm not seeing anything at this stage here. You got good volume in it today. That's going to stop this thing on a daily basis. If we go take a look at the oscillator unchanged line out here, right now it looks like that's about 31.42. So 31.42 would be support. I don't see any other signals out here. So Chicago Bridge does look like it has turned the corner, both on almost the monthly, the weekly, and the daily charts out there. So, folks, we're coming to an end. I want to tell you that I'm absolutely grateful for all the time that you've given to me, for sending me all those wonderful cards and letters, basically emails, for calling into the show, for sharing with me your thoughts and ideas and things that you're taking a look at, and even for those of you that have disagreed with my analysis of what the market is doing. I'm still grateful for those comments as well. There's always two sides of the trade. And that's a beautiful thing. Have a happy Thanksgiving, wonderful Thanksgiving. Be safe out there, and we'll see you next Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.